Hey everybody, welcome back to our ThinkScript class. My name is Mike Fairbourn. Hope you're having a happy Friday. We made it through the week. It's been a volatile week, but we made it through. And folks, I did receive several requests starting last week about the TTM Squeeze and just people interested in getting a screen for that, a script specifically to look at a compression of or I should say just compression of volatility, and then a potential expansion of volatility, which is what the TTM Squeeze looks at. So um, I want to take a look at that today. We'll address that first, and then also throughout this week, I was looking at some of the companies that did beat earnings expectations, and we're looking at companies that had beaten expectations for, let's say, the last 10 days of reported earnings. Let's say whatever group of companies we're looking at: S&P 500, Nasdaq 100, and then looking specifically at those and saying, okay, what have been the price reaction post the earnings? As many of you might know, a lot of companies do change and change trend direction can be strengthened when a company does beat earnings expectations. Ultimately, what we're referring to there are earnings surprises. So, folks, a couple of things to look at today. And by the way, these two might overlap. Sometimes you will get an earnings surprise at the same time you're getting a TTM squeeze. So, want to take a look at that today due to a significant number of requests we had on that, as well as the earnings beats. So we'll dive into that momentarily. Welcome to each of you today. Questions, comments are always welcome to the chat. And hello to you, Chris. Life of the Fascinating Robert. We've got Will, Scott, Rocky, Ocean, John, and Michael joining the chat. A good friend of mine, Cameron May. Folks, you can follow us both on X. Our handles are listed right there, as Cam has pointed out. They are actually at the top, as I'm saying it right now, the top of the chat box. Mike Fairbourn CS or Cameron May CS. I encourage you to do so. All right, folks, let's turn to some disclosures to get the show on the road here. Now, information here is for general information purposes only. It should not be considered an individualized recommendation. I should say, or endorsement of any particular security chart pattern or investment strategy. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software applications for education purposes only. Backtesting results presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Now, investing does involve risk, including the loss of principal, and past performance of any security strategy does not guarantee future results or success. Having said that, let's go ahead and just dive right into our discussion here. I'm going to go ahead and just share my screen here. Oh, I've got to pull it up. There we go. That's some, okay, there we go. Well, it's been a little bit delayed. That should do it. Yes, it does. Okay, fantastic. Here we go. How are we doing on the market? So we can see up top, well, we know we've been down today, and here are some of the numbers here. I think we kind of got hit a little bit today due to the Amazon news. In fact, how did they do on their earnings? A lot of times it is the guidance going forward that we do see potentially affecting the markets. They did beat expectations, but it may have very well been that guidance. Got some pretty good volume. Still an hour left in the trading day, but good volume, as you can see right there, given the fact that it is a Friday. There is still an hour left in the trading day. Okay, but earnings is an interesting area. I did want to take a look at some of the volatility, compression of volatility and just general changes in volatility initially before we get going here as we start off into this. So what I want to do is initially take a look at a couple of different indicators that are behind the TTM squeeze. And the TTM just stands for Trade the Market Squeeze. All right, TTM squeeze, which is an indicator that's really built on a couple of different indicators. So just a quick explanation of it, then we'll go through the script itself. I've added to that script so we can get a sense of how many bars or days, depending upon the time frame, the frequency we're looking at, how long that squeeze has been in effect, which oftentimes is an indication for traders looking at a compression. They're not just looking at 1 or 2 days, but maybe 3 or more days out in time. So a couple of different notes on that. Heck, we can start off with Amazon here as we do this, but let's just go ahead and add in a couple of different indicators. We've got the Bollinger Bands, which is a read on, I'll add it in here initially. It is a read on volatility. It does so, though, by by looking at a moving average, a 20-period moving average, as the default stands for, and a 2 standard deviation above, a 2 standard deviation below where that moving average line is at. Okay, so it gives us a reference point just generally around price action. So you can see what will tend to happen here is in tighter ranges. What happens is when prices are going, a bit sideways, as you can see over here, there is, just to choose this particular scenario here, yeah, you get a range bound movement in price, and you get a little bit of a squeeze there. Now, a lot of times traders will look for a 2 standard deviation move above or below, and that might indicate a breakout. Okay, there is another way to do it, and that is with the Keltner channels. The Keltner channels does look at an ATR, which we talked about a couple of weeks ago. So it's interesting to bring it up actually now. But the ATR, the Keltner channels is using an ATR. The default is actually a 1.5 ATR, as you can see right there. These can be obviously changed over here in the gear, but what it's looking for is a 1.5, and then we got a ton of different lines. But we got a 1.5 above and a 1.5 below price. So it's looking at the range of the bar, and basically looking at the true range above or below an ATR, which is the average true range. And the average true range is simply just a true range of the bar. The true range of the bar is the high and the low over a given period of time. Now, when things become quite interesting, when you start to get a really substantial indication of a tightening of volatility, is actually when the Bollinger Bands go within or inside over a period of time. They can go inside of the Keltner channels. Okay, so when that's happening, it can represent like an extreme indication, or of a contraction, extreme contraction of volatility. It's a secondary sort of a measure there. I want to kind of explain it in a little bit more detail as we take a look at it here. This is all broken down, though, into, let's just pull it up right now, the TTM Squeeze, trade the market squeeze. In fact, there's a nice little explanation of it. You can see right over here that it does explain the relationship where you've got Bollinger Bands and Keltner channels and the changes within them. Now, let's add in that indicator, though, right now. I just want to show you that you can read about that. I'm going to actually explain it for you just live here. Do we have one of them? Yes, we do. Okay, so we've only got one, but you can see that it does give us the defaults of both of our Keltner channels and the Bollinger Bands combined. So let's click on that right now, and I'll kind of show this to you. So if you look over here on the far left-hand side of the screen, starting over here, I'm going to highlight a range. And if you look down at the bottom here, look down here with me. You're getting an indication of these red dots. Now, they are red dots, and what that indicates is when the Bollinger Band has shifted inside the Keltner channel over that period of time. Okay, that's extreme. It's an extreme sort of a measure of volatility contracting. So when the Bollinger Band shrinks inside the Keltner channels, price action is, let me just explain what's going on here. It's at statistical lows. We don't get that over here in the green. Our green dots over here represent that that's not the case, but it is at statistical lows when that occurs. Okay, so the condition rate basically is when the standard deviation drops below the ATR and simply means standard deviation, because it's the Bollinger Band, that means that price is less volatile than the historical true range of prices. That's what we're talking about when we're looking at the ATRs. So what traders will look for is, a lot of times they're trying to find those areas where you're getting low volatility that's leading into higher volatility. There are a couple of different statistical methods that suggest that, but we can see that it's referred to as volatility expansion is a statistical means behind it. I'm going to kind of just show this to you right now, as you can see it over here. Okay, a lot of times though, and you've seen this actually, well, over this 1 year time frame, you can see this, but down below, look down here with me. You get one little dot over there. Really, traders, as I looked into this a little bit more, I'm somewhat familiar with it, but they're looking at least 3 to 5 days of the TTM squeeze being in effect. Bollinger Bands trading within the Keltner channels instead of just that one day that we saw right there. Okay, that kind of represents just additional time where that volatility is just tightening and tightening and tightening up, pointing to this measure right down here. And then you might be looking for a possible explosion of the move towards the upside or the downside. So it really does help to signify a breakout kind of a trade. Now, I want to point this out to you. In fact, I'm just going to take out those for now. We could just look down below as we're, I mean, we can keep the lines up as well, but if we want to go back to them. But now you have a sense of what is creating the red dots down here below. Let's take a look at one right now. I'm going to tie in some additional features, and then what we'll do is we'll dive right on in to our script here, and we'll go through it in a little bit more detail. Okay, so taking a look at Boeing, for example. Now, Boeing had a longer-term downward trend. You can put this TTM squeeze in context. In fact, let's do this. What else could we see and to kind of help us give us an idea of maybe an indication of a change over here? Something could be changing. I know Boeing's down today, and it's probably, well, a lot of times it can be market related. But, a couple of things we've talked about in this class, we've said, well, if there's a trend line break, that could be an interesting indication that the trend itself, what is defined as this price movement down here, the slope of that trend has flipped, and now we've begun to break above some highs here. So that's interesting. So we hadn't had that since actually the end of 2023 for Boeing. Okay. Next up, what do we have? Well, we might have like a moving average that will tend to fit within there too. So what I'm doing is I'm tying this in to the TTM squeeze because we did have actually a contraction here just recently. So let's just do this. I've got let's add a couple of these in here. Simple moving average, some of the bigger ones. Let's go with a 100 and a 200. We'll go with a 100. Yeah, that should be big enough. We've got it in light blue down below. That would be fantastic. And let's go with the 200. And we'll go green. Okay. So let's pull these up right now and see what they look like on the chart. So here is another possible indication that we could tie into the squeeze. In other words, if you're getting contraction, you want to look in what context is that contraction occurring? Is it happening with the trend? Is there a longer term trend? Right now, we've identified a couple of different points. We said, well, there is a trend line break long term. You'd see that on the weekly chart as well. It's kind of a weekly chart. Over here, we did take out the slower moving 200 that we have in green up top. We actually broke up above that and we held. Now, a lot of institutions and analysts will say, if you're above the 200, it's more bullish, and below the 200 is more bearish. We broke above the 100-day moving average as we broke above this level right here. Now, I've got a lot of lines in there, and that's what happens when I just start drawing a lot. But one of the key points I'll note here too, did price action change on the trend? Can you guys see it? That's a new low. That's a new low. But that was the prior high there, and we took out that high. In fact, we made a new high here. Now, do we have a higher low from this low? I'd say we clearly do at this point, but how did we know that we had a higher low? You only really know that or get that sense when you begin to break a new high. So this was another high over here. I know it was short term, it was intraday, but there you go. So that right there defines for us what we have, what appears to be a trend change, right? That's the change in trend. Because we did make higher highs and higher lows, along with some of those larger indications of the trend line breaking above a longer term moving average, and these things that fit kind of into those other categories. So I'm building this up a little bit because we've actually got also a price pattern. What price pattern is this? Do you guys recognize a price pattern here? Let's say a bullish price pattern. I'd say it's much more in line with, let's say, a swing trade time frame too. It's a little bit shorter term. But after a trend line, sometimes we do get the old pattern that looks like this a little bit. And it looks a little bit like a lag pattern, right? You get the flag pattern in there. So you're just kind of building up and getting more ideas of what's behind the scenes, because I'm just going to bring this point up right now. When you begin to get a squeeze, and you can see that right down here, that's our squeeze. That's what brought this stock up. And that's actually how I was able to find this company, was through the squeeze. And I'm looking at this. Do we have 3 to 5 days of the Bollinger Bands trading within the Keltner channels, really giving us a sense that price action is at statistical lows? We do. It's right there. We've got about, let's see, 7 days, 8 days right in there, right in there. By the way, it's greater than 3 to 5 is what I'm getting at. Now, you'll notice that volatility just changed. What do we tend to see in a bull flag type pattern? What's the expectation? Maybe something like that. Now, volatility is really interesting here, because we are going to be able to find some of the bull flag patterns that come up from time to time by using this at the pullback that is very, very hard to identify otherwise. But you can see right there, this is lower volatility, and that's exactly what we were getting right through here. Part of the flag pattern. And those are some of the strongest flag patterns, folks. It's this. It goes sideways. But yes, I do have a script, and we are going to share that in just a second. And that's how I found this for you guys. And so you can utilize that going forward. That, by the way, that was the request. That's what the request was for. And that's why I did this class. We had a ton of requests last week for this indicator. It just popped up on the radar. I was getting indications off of X. I was getting them from YouTube. I was getting it from my other classes. And so I just said, well, I guess we're going to be doing this. But it's a very fascinating one. It's an interesting one to keep an eye on. The script I've got actually does count the number of bars for us too, so we can see where we're at in the development of the squeeze itself. Okay, but we're getting there. Okay, I kind of got a little ahead of myself, but just a quick note before I continue on. Let's tie this in to our flag pattern here, where we are. And it's not a guarantee, by the way, any price pattern is not a guarantee that it's going to break out higher. We're just getting some changes over here right now, by the way, that also are supported by the money flow indicator, as you can see right down here. Money flow has been really moving. Major positive divergence on the money flow. I'll point that out in just a second. I can go through some of these indicators. They're very interesting. But it was spotted because of the TTM squeeze. Now that we're moving out of that range, look what we're after here. Okay. There's your highs. We've actually met target 1 of a bull swing pattern, a bull flag swing trade pattern, which is the prior high, but the target 2 can be substantially higher. And what are the indications of the target 2 breakout? You're looking at it right there. Now, will we find support here or not? The markets are pulling back. If the markets were to pull back substantially, I've seen markets, weak markets, folks, destroy very beautiful bull flags for years. You got to have market strength. You don't have to, but it really does help. It can really wear on you. Kind of like bicycling into the wind, if you've ever done that before. My goodness, it's like you're getting like 2 or 3 trips in one. In fact, I did that just recently, and my legs were so tired the next day, just trying to bike into the wind, going up a hill. I had to take a rest. Needed it big time. Same holds true here. If we're hitting that market, if we start to break down, well then, that can happen too. All right. Sorry to slip in that little analogy. It just came to mind though. But it is kind of like going into the wind if the market starts to come down. We did look at that earlier with the market right there. So anyhow, there you go. Let's get into it a little bit more, but I'm just going to say that's an interesting indication at the end of a flag pattern. That TTM squeeze, really fascinating there in terms of the breakout. And let's get into the script. Oh, one more thing, I did mention it. Look at this. For those of you that do use like the money flow, what it does try to do is it tries to give us a better sense of buyers relative to sellers over time. Look over here. See that high? This high in price? We have not reached above that high on prices. So very distinctly up top prices. Down below on money flow, folks, we've flat out blown through it. Right there. We blew through it, and that suggests that we will take this high range out, according to money flow. So it suggests that we might have a T2 follow through, kind of a pattern A T2 target. There we go. All right. Let's do it. Okay, so what I've done is I've gone over here. I put it into the Market Watch tab so we could actually have uh, some counting going on so we can get a sense. You really can't do that on the scan. I could develop it as a scan too, but I'm going to show you how this could be really quite effective. Let's go TTM Squeeze, and I've listed it as TTM Squeeze with the number of bars right there. This is the I built this one. I'm going to slide this guy up top, and we'll go ahead and click OK, and we'll let it rock. Let's move over here. So it's got the front row seat, and there you go. It's loading it up the NASDAQ 100 right now. Give it just a chance to load up here. I'm going to slide this column over here in the meantime. But I did say TTM Squeeze bars because I wanted to give us a chance to see how many bars. And we're going to go through and just make sure that the script is working appropriately. I've looked at it. It should be fine, but I want to do it live for everybody just so we can see what's going on. Ooh, still taking some time. All right, that's okay. Let's start off with Datadog. In fact, why don't we have the symbols? That's nice to have. There we go. The symbols, the description, and there we go. So there's Datadog right there. You can see 8 bars. So clearly past, it's been in a squeeze for at least 8 bars. The NASDAQ 100. So this is, we're looking at heavily traded NASDAQ stocks. Many of the, large cap, right? That are comprised of this, but it's just DDOG right here. Let's pull it up right now and we'll count through it and see where we're at. Okay, let me do this. There's Datadog right there. Okay, so let's zoom in on Datadog and see what we've got here. Long-term upward move, also a long-term consolidation, getting really into a tight range here. Kind of just sort of, tightening up over that range. And you can see we're getting very, very close to our 100-day moving average. And down below, let's just confirm that fit. Really good money flow too, by the way. Just as a side note, it's really been strong. In fact, money flow is higher now than it even was in these higher price highs. But we showed 8 bars. A good quick way to count that, go down here with me into that bottom drawing tool, just the diagonal line. It enables us to count. I'm going to click on the very first red dot right there. And I'm simply just going to click here. Oh, let's go up top. As long as I'm lined up, I've got my crosshairs in line. We're good to go. Click, pull over, pull over, pull over. There we are. We're lined up now, and it says 8 bars. Now, it's not 9 days up top. Those are market days. We're actually just counting bars here. So this is going to spot where the TTM squeeze is occurring very, very quickly for you. And give you the number of bars as well. So a scan is just going to say, unless we program the scan to say, hey, it's got to be at least 3 to 5 bars. But that's what's kind of beneficial here within the Market Watch tab. And by the way, another quick note, if you put it in the Market Watch tab, you can also put it over here in a watch list. And we could pull it up over here too, couldn't we? Yeah. All right. So man, it's taking a while to load up. It did not take anywhere near this long when I was doing it by myself. It's just nothing, not even close. Here's one, CSX and PCAR. Let's just do those. Those are, what do we have? CSX 4 and 5. CSX, boom, right there. Tight range. How do you feel about this chart pattern? Well, we did have technically a higher high and a higher low off the bottom. We did get past earnings here. It looks like it kind of came close to earnings. It basically met earnings expectations, and we kind of consolidated right at that level. Now, how might we use this? Remember how we looked at this on Boeing? Let's look at just PCAR as well. I'll get one more in there, and we'll talk about it. Okay, good example here on PCAR. And by the way, PCAR, let's just do a quick note on this. Manufactures, distributes light, medium, and heavy-duty commercial trucks. Okay. So here we are looking at it, and it's tightening up over this time frame. Bollinger Band trading inside the Keltner channel, telling us that price action is at statistical lows because we are using statistical measure with the Bollinger Band. Now, we happen to be right at the 100-day moving average. That's why I wanted to keep these longer-term moving averages on here. We could get some insight from that. Now, how might we look at this going forward? Well, what is the range we were in? Here are the highs. Here are the lows, recent lows. I know we dipped a little bit further here. There was a major gap through there. High, high. Look at that. Oops, sorry. More gaps right there. But what if we, I mean, it could be because we're tightening up in price, we could begin to either break lower. Looks like the trend might be up though. And honestly, this looks a little bit like a longer term bull flag pattern. Oh, okay. Now we've got some eyes on this. How do we see it? Right there. So not only are we seeing a pattern form, but we're also getting with that this indication that price action is at those statistical lows. So with that, take a look at support and resistance. You've got a moving average. Do we get a bounce here? Markets are down, so we don't know. But here is your range. Now, if you started to still stay within there and you broke above this level, that could be the resumption of a longer term pattern to the upside. Okay. Forgot to share this. Let me just go ahead and share the script right now. But I just want to show you so everybody's clear on it and we're good to go. I'm going to share this right now. Let me throw this into the chat for everybody. And there you go. Let's see. Let's make sure that that works. If you guys could give me a confirm that you're set and ready to go. Now the coloring on here, and by the way, the way I designed this is a little bit different from just using. I think there were some advantages to using. Oh, let me cancel that. There are some advantages here to using both the Bollinger Band and the Keltner channel in the script. And as a quick note, since I shared it, just wanted to state that ThinkScripts aren't guaranteed for timeliness or accuracy. In fact, they're reliant on the data that's fed into the platform, right? So as long as that data is good, it should unfold and react accordingly. But all we've simply done over here, which is really nice if you separate them out, instead of just putting the TTM in here, what I did is I kind of build it around a couple of different areas. In fact, you can see over here, I've got specifically input lengths. We've actually got deviations, and these could be changed if you wanted to as well. Okay, we've built the upper and the lower indications, and we've used exactly the coding that the indicator has. I simply just did a copy and paste on some of that. The real key thing here is the TTM squeeze condition. That's right. The BBs are inside the Keltner channels, and all it is this. A squeeze is active, and you can see down here, it lights up. Active, active, active. We're looking at the upper Bollinger Band, right? That was on the upper channel being lower. It's less than the upper Keltner channel. In other words, the upper Bollinger Band is trading below the Keltner channel, and second condition to make the squeeze effective is that the lowered Bollinger Band has to be greater than, right? It has to be above the lower Keltner channel, the lowercase c for short. I've got my colors lined up. If you've got a different background, you can change the colors down here. If you start typing in a color, you're going to get other indications. Like say, for example, if you wanted to go over here and do like a dark underscore green, or you can just click on it right there too. You've got, there's dark colors, there's just standard colors. I'm going to just go ahead and back that off. Many of you might have the light background. So you kind of want to get what what's interesting, or easier for you to see, I should say. All right. Let's do this. Let me back this down. And I wanted to do this too. I'm going to go ahead and just share this script for those of you that are attending in our recorded session. I'm going to have this over here for you. I'm going to bump that up so you can see it. It's really just this. If you can copy and paste this in, and ultimately all you need to do is copy and paste that portion in of the script. You can plug that in and let's go ahead and just whatever. Forget the grammar. Ignore it. Yeah. Okay. So I'll bump that up so you can see that. But yeah, if you're, I pasted the code in the box, but that is it right there. You could just snag this and copy and paste it into thinkorswim. And in fact, I'll show you where to do that if you don't know for sure. But set up top, open shared items. Just type that in, hit preview. Okay, you can rename it if you want. I just called it TTM Squeeze bars, so you can catch the number of bars there. Okay, how are we doing on the chat? That was a lot. I'm going to breathe for a second. Um, the script, loaded getting a bit of it. Okay, so Ocean Life, on that too, you will get this. In fact, if you don't click it enough times, you might just get something like this. So yeah, good point. What you want to do is you want to click on it and let it load up. I'm sorry, yours should load up quickly. Mine was before. I have no idea why it's not now. It happens sometimes when I'm presenting, but you want to double click on it, get it in descending order, ascending order. I really don't have it. I just have everything that's going to show both conditions listed here. It's kind of funny because it's got 21 and 20. These have been going on for quite some time. Interesting, maybe historical, uh, uh, let's say volatility compression right here on these companies. Maybe they've never seen that level of compression before. And what does that mean? Very interesting there too. But as long as you go in here, you set it up, um, click on it a few times, you should have it. In fact, let's do this. I'm going to go over here and we're just going to go into, this isn't going to load up too fast. Well, quick note. Let's just put it this way. I don't need to do that. It can pull up the 500. The other point I wanted to make is if you use just a standard script that we have over here that we've also built, this is the 1 week percent. And let me make sure that is the 1 week. It's probably 10 days. No, I have it as a 2 week right now. That's okay. Don't worry about it. It's just 2 week. And basically what you can do is you can look and see over a weekly time frame, hey, what's been happening over here on some of these companies? Uh, how has it been performing over the prior week? Now, hold that thought because it's going to become a lot more relevant with the next script that I wanted to look at here. In fact, I've got to take off that double. Well, I'll keep it on. I think we're okay. That was last week's double divergence. Some of these do have double divergence also. Um, that was the MACD and RSI. They have those also on these companies here that do have a TTM squeeze. So this is just layering of additional ideas and what might be happening behind the scenes here on a double divergence. All right, that was last week's class though. Something you can check out there, folks. If you're finding this presentation helpful, you like this kind of presentations, don't be shy to smash that like button. It does help get our content out, and as well subscribe as a side note. Okay, well, with that, I talked about earlier this week, I talked about some of the earnings. We are in the midst of earnings season. Just a cool way to help us kind of dissect what's been happening with earnings. Like say, for example, here is the S&P 500 up here. And we had 38 companies report yesterday earnings. Now, it can be kind of trying to click on, let's say, Thursday and go through all these, but you can see you do have this column. As long as you've got earnings selected over here on the left-hand side, checked, we can look at, hey, what were the estimates? These guys were in line with expectations. You got others in here. Is that Zimmer? Yeah, Zimmer beat by 1 cent, but there are some that beat. There's some that clearly missed expectations. That's one way to do it. We can also use ThinkScript to help us in that regard as well. And yes, Chris, I'm sorry. Got it. 0 means it's not a squeeze. Didn't define that. Okay, yep. All right, just wanted to hit that before I moved on into this. But hey, we're looking at a calendar. This could be quite cumbersome to track this. So let's go ahead to ThinkScript right now. And this is what I had built for you guys here. Let's do this. It's going to be, okay, so we'll go back here and we'll scoot the bars over for just a second over by double divergence. And I'm going to show you how we can potentially utilize companies that beat their earnings expectations. In other words, another way to say that is there was an earnings surprise. I just got an earnings beat right there. I'm interested to see if we can get everything to fit on here too. But so I'm going to put it right there. There, yeah, there is the earnings beat. And I just put it in letters, beat or not beat. And there's no beats, there's beats. And we've got some that meet different conditions. The whole idea here is just to click. And you can see that all of these companies beat their expectations. Every one of them beat. Okay, they beat their number. In other words, if we were to go into Tesla right here, what this is showing us, here is Tesla. I'll show it to us, show it to you guys. In fact, let me just do this real quick. If I edit the formula, as a quick note, the look back period is the last 10 bars. So basically the last 2 weeks. If you wanted to look at companies that just beat their expectations this week, well, we would just change this into 5. Okay, made it real easy there to do. I did put 20 up top. Originally it was 20, but it's 10 right now. So let's just go. You can just update it to whatever you want. I went to 2 weeks for a class I had to fill in and teach just to kind of highlight it. But I built this based on some of the requests in that class as well. Here is Tesla. Let me just show it to you right now. So in other words, two things had to happen. They reported earnings over the past 2 weeks. That's a condition separate in and of itself. And secondly, it had to beat earnings estimates too. So it's both timely and pertinent relative to earnings surprises. Tesla, right over here. Okay, it beat earnings expectations. It did. You can see it right there. 62 cents to 73 cents. And was that over the last 10 bars? Indeed it was. That's 8 bars. It'll fall off come, next week it'll fall off. But you see how it met both of those expectations? It was a TTM squeeze and it began to trade a little bit lower. Okay. So it doesn't necessarily mean that stock is going to go up. It just says it might be positioned to, and that's where this other column, another ThinkScript that we built, could come in handy. Look over here with me. These beat expectations over this time frame, and Starbucks is up over the past 10 days, which matches our 10 days earnings beats. It matches it nicely. So the time frames fit. It's within 10, and this is looking over 10, so it captures the full time frame. Starbucks and T-Mobile had a different effect, a different impact, right, around earnings beats. They might have guided higher. These other ones, yeah, AMD, I don't know. Microsoft, no. Others, no. These are double-digit gainers. Let's look at both of them. Starbucks and T-Mobile. S-Bucks right there. Okay, now can you see? After the earnings report, then it jumps up. It's a gap higher. And sometimes, you break these resistance levels. It takes sometimes a good earnings report to do that. In fact, an earnings surprise, let's just double check that. 65 cents to 69 cents, about a 4-cent beat, according to what we're seeing there. And it happened within the last 10 days, exactly the way the ThinkScript told us it would. It's 8 days ago. Now, if I wanted to see more of it, I could go back over 20 days or whatever the case might be. So that was our second script. Go ahead and share this for you guys right now so you have it. And I will also put that into our presentation here. All right. Okay, so we post that in. And this one is the, so earnings beats. Again, earnings beats 10 days. That's the script right there. I just put it into the chat. Okay, so again, not guaranteed for timeliness or accuracy as long as the data that's coming in is correct. And you saw me verify it on a few different fronts. This is one I talked about in the class. Just as a side note, IDX Labs. This is one actually in our swing trade class that we did put a swing trade on paper trade example because it happened off the bottom. Those can be interesting sometimes. Still holding regardless of kind of bad market conditions. This one, if you guys have been in my classes earlier this week, you're probably sick and tired of me showing you this, but possibility of a head and shoulders bottom there. That would be a shoulder, a head, and a shoulder again. And also notice the gap there and the gap there. An island bottom, or what's referred to as an island reversal possibly. Notice we took out the 100-day moving average. There's the 200 in green. We're right at it now. Notice this. Did I tell you guys how I found this one? Right there. Did break a long-term downward trend line above those 200 days, but there is your TTM. Sometimes you get that ahead of earnings, and if it is, there is some expectation possibly around that. But actually, the TTM squeeze was a key driver in many of these. Just to spot, kind of an interesting price action, statistical lows, volatility expansion concept, that if it's tight, it can expand, and there you have it. All right. Oh yeah, I'm going to share that over here. So if you guys are viewing this on the recorded session, put this down here. So this one was our TTM squeeze. number of bars. I just had a number of bars like that, but that's the number there. Okay. Ignore it. Okay. And we'll go down here and we'll just put in earnings beats. Yeah. It was I have it listed as 20 bars. It's actually 10 right now. Whatever. I'll just say number of bars because that can be changed. Number of bars. And this is it. If I paste it now, you should have it. Yeah. So let me just pull this down. I'll just take that off. You don't really need that portion right there. And one more. That's the code you'd want for that. Okay, so those are the two codes that you could plug in there. Okay. So that is what I had for you guys today. Yeah, Gazelle, hey, why is money flow not increasing in the IDXX? Let's take a look at it. Let's pull it up so we can actually see it. Yeah, hey, it broke down. So sometimes, now we don't know, but even analysts, or this is referred to also as a smart money indicator, quote unquote. It's not always, there's nothing 100% accurate, but we're in the process of kind of layering a number of different concepts, together and trying to see, what could be setting up as well. But if you come over here, Gazelle, and you say, for example, how are we doing on this? You're right. We had one upward day, and you see that right there. And there was a little bit of a spike in the money flow, and we've been going sideways ever since. And so it's not really necessarily, in fact, I think what I said in the classes is a lot of traders won't take a trade like this until, if you have a big day like that, until you've actually gapped above, until you break above this line, or you drop below that line. And by the way, the 200-day moving average, which is in the green, I'm just going to draw right over it. That's your 200 DMA right there. You might very well wait for it to break above there. So, and that kind of ties into what I was saying. You got the squeeze, but dang, are we breaking out or not? That's kind of the whole idea. But yeah, good points. All right. Good. I'm glad to see you guys are looking at it, checking it out. Hopefully you found that informative. Again, hey, consider smashing the like button if you liked it, folks. The subscribe. Thank you, Cam, for your help today. I don't think we had a survey today, Cam. Let me know if I'm wrong. But kind of had most of my attention on the class where I need to have it, especially with code and stuff. But folks, I hope you have a terrific weekend. You too. Really appreciate it. And you guys take care. Look forward to future discussions with you. And always, if there's any topic requests, happy to try to fit those in like we did today. So on that note, have a terrific weekend. See you next time.